Okay, it is the Monday session for Bitcoin, and Bitcoin currently is up 0.67%. It had a rally, a bigger rally, more than 1%, and it's fizzling out at this point. We're still back testing and testing the downward trend line. Bitcoin continues to be in a downtrend with a series of lower highs and lower lows. It's in a downtrend until proven otherwise. It is in a downtrend. Now it's testing the downward trend line right now, including the shadows. Previously we hit it right here, excluding the shadow right here. We're hitting it right now, including the shadow from the final exit point at 116,000 and our top at 126,000. We had a bearish rising wedge, and we're back testing that, pull back testing it again, and hitting this trend line at the moment. Again, nothing has changed. Now, I was going to make a video on Sunday, but had to finish some last minute Christmas shopping, as you know how that goes. And the stores are just a madhouse right now. The parking lots are packed. A lot to finish over the weekend, so nothing really changed on Sunday. So forgive me for not posting, but I did have to finish my last minute Christmas shopping over the weekend. So again, we're back testing this trend line. We're testing the downward trend line. There's nothing bullish about this chart. Oh, this is so bullish. We're up today. Yeah, wow. Having a rally that's fizzling out at the downward trend line, backtesting the breakdown of the bearish rising wedge. That's so bullish. Wow, that's super bullish. And again, two things. The Fed has paused, pretty much officially paused here, only penciling in one cut in 2026. They're concerned about inflation rearing its ugly head. You know, we continue to have those experts and moon boys telling us, oh, we're going to be at new highs. Remember up here when they told us we had a breakout and it was a fake out? And I told you we were topping right into major resistance. Told you we were going to sell off. I've been calling for a 40 to 50% sell off so far. We've dropped 36%. Told this wasn't going to happen, and then every dip, you know, the so-called experts and the moon boys continue to call bottom. I don't think you bottom until down here. My target's been 63,000 to 74,000. That's this dotted line right here, which is the April low. Which, if I zoom out here a little bit, you can see that I've been predicting that we give all of this back, we go to the April low, and eventually even take out that level. I think with this push down, you will take it out. You'll get a rebound back up, and then I think you'll get one final push into January. But like I said, drag out into February, possibly March. I doubt it goes that long, but could go on the Fed meeting at the end of January, where we could get them acting with jumbo cuts. If they panic by then, we need to see the stock market begin to play catch up to Bitcoin in order for that to happen. If not, then it drags out maybe into February. There is no February meeting. The next meeting after the January meeting would be March. So again, at some point in the first quarter there, I told you I thought it'd be January. I have the guts to tell you what I think. I think we see the Fed panic, but we got to see the stock market play catch up to Bitcoin. And if Bitcoin gets the next leg down here, 74,000, and then another leg down, again, I think you're going to see the stock market begin to play catch up to Bitcoin. But these are the highlighted areas are the Fed meetings. Here's the pauses, and we still went down with these meetings. This is the meetings here since the summer. This was June, and then July, and then we saw in September, we saw the Fed begin to cut, and we ended up dropping. Oh, this is so bullish, and Bitcoin goes the other way. And then it rose higher, but then it topped and formed negative divergence on indicators. It formed a head and shoulders in this triple top right here, this triple top that I've talked about in July and August. We got these peaks, and then we got another one in October, and that peak gave us a little miniature head and shoulders pattern. And again, we have the left shoulder being a sell-off with the Fed, and then the right shoulder being a sell-off with the Fed, and then the collapse, the breakdown of the pattern, the neckline, the back test of it, and the complete collapse of over 29% from the high just ahead of the Fed there, with the Fed really with that rate cut. So we've had the two cuts, the first cut here, the second cut right here, 29%, and the third cut is going to give us another big dump, as I've talked about. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like my indicators, and you'll see more of my indicators towards the end of the video, then please support the channel. I just ask that you do that rather than getting sponsors. Turn those offers down. They want to pay me. They want to pay me to send you to these exchanges. You never know if an exchange is going to go under. You never know. We've seen other ones go by the wayside before. A lot of these exchanges want to get you leveraged up to wipe you out. I have an interest in that. Again, I don't want any part of that. So you're smart enough to figure out where you want to trade. Just ask that you support the channel by following the link below, and it'll take you to a secured site. You can donate any amount you want. If you can take a moment to do that, I would really, really appreciate it. Most YouTube channels make their money by having sponsors and doing these, trying to sell you things and get you to go to these exchanges. I choose not to do that. So if you could just take a moment to partner with me. We're here to talk about Bitcoin, not here to have me sell you something or try to get you to go to some exchange. Please just follow the link below to take you to a secured site, and you can donate any amount you want. I thank you for your consideration for that. Look, this is what I think is going to happen. I think you're going to see, I think you've got this consolidation right here in the weekly time frame, very similar to what we had right over here at the 50-week moving average, but then you still got this next drop down to a new low before rallying back up to the 50-week. I think you're going to still move further away from the 50-week. I think you're going to move down towards this trend line down here, where I think you're going to bottom, and that's going to take us closer to 63,000, or maybe add it closer towards the 200-week moving average here, currently around 57, might be at 58 by now. It looks like the 200-week simple moving average is still hovering right around that 57,000 area. So this is what I think is going to happen. You're going to move closer to that 200-week. You're going to move towards this trend line, and then I think you're going to bottom and rally back up to that 50-week moving average. You got people calling a bottom, all the hype and hopium, here we go! And these are the people that never saw the top, never saw the sell-off. My signal's called the top. You see that signal up there? Called the week of the top there, when the top happened. And bars turned and have been red ever since. My signal's got it right. I got the 2021 top. My signal's got it right. Or the 2022 bottom. Some of these turning points along the way. Is no bottoming signal here. Hello, do you see this? There is no bottoming signal. Bars are still red, and there's no bottoming signal. The 80,000 is not the bottom. No, the experts are saying we're going to be at new highs. These are the same by January. These are the same people that told us we were going to be at 200 and 225, 250,000 by the end of December, which is, a week and a half from now. We've crashed down to 89,000. We hit a low of 80,000. The complete opposite to what these people said. They've moved their targets into the future, as I predicted they would do. Predictions didn't come true. My predictions about them did come true because I know what they've done in the past. They did the last bear market. I know that that's exactly what they did the last time around. Also had the Bank of Japan raise rates as the Fed gave us a hawkish cut. I predicted we'd get a hawkish cut where the Fed would give us a cut, but then do what they did at the last meeting. Well, I think we're done, and we've done what we needed to do. Concerns about inflation, whatever. I was right. We got a hawkish cut out of the Fed, and again, they pretty much now have paused. So again, markets are going to have a negative reaction to that. Bitcoin's going to have a negative reaction to that. And then we had the Bank of Japan raising rates, and again, the rate hikes for the Bank of Japan there. By the Bank of Japan, I should say, have led to significant declines with Bitcoin here, nearly 28%. Over here with the lower high, they did it again here in 2024 in March, and then July again, over 29%. Over here, it was from the lower high, it was 30%. It was well over 30% from the high. Again, oftentimes Bitcoin has started to turn just ahead of it, which is what we had happen this time around. But again, I expect here in the weekly time frame for Bitcoin, you're going to see, and I marked it just ahead of the cut there, or the rate hike, pardon me, by Bank of Japan, that you're going to move down towards this 200-week moving average. I'm expecting a target of 63,000 to 74,000. 74,000 is a slow over here. I think you'll end up taking out 74,000, move closer to 63,000, or maybe even beyond it to the 200-week moving average. But I'm expecting about a 50% drop, maybe just under that, maybe just right at it or over it. 63,000 is a 50% drop from 126,000. Been predicting this since the top, and it's been playing out. We've dropped 36% so far. You know, a lot of people have such unrealistic expectations. It's amazing. We had a rally the day of the rate hike by the Bank of Japan. And all the people on social media, see, it's not going to happen. Again, hello, this is over several weeks that it crashes around 30%. It happened in one day. People are so out of touch with reality. It is amazing to me how far gone some people are. You know, I just posted something about the banking crisis. X, I posted in the early stages of it. It's already starting. We're seeing the early stages of it. And I talked about what's going to trigger it really develop where people realize it's happening. Somebody say, because we have an update right now today, some banking crisis, there's no banking. You know, people are just so far gone and have such unrealistic expectations. Again, these things are developing over weeks, not in one day. Hello. Just as the Bank of Japan rate hikes impacted Bitcoin over a period of many weeks, so too the banking crisis is beginning to unfold. I talked about the trigger. Again, you're going to see rising yields, which could trigger widespread defaults with the commercial real estate loans, which the regional banks have massive exposure. If yields rise, we could also see the banks' portfolios, which have massive unrealized losses, have realized losses as there's forced selling and liquidity issues. Seeing problems already. The Fed is buying short-term treasuries with reserve management purchases, which again, the herd believes this is QE. It's not. They're trying to stabilize the financial system. We're having a banking problem, and that's why they're doing it. It's not QE. QE stimulus. They've got long-term treasuries. This is short-term, trying to create have liquidity so they will stave off a banking crisis. Will not be successful. The Fed will not be successful in doing that. Now we're having problems in the repo markets, injecting billions there. These are all warning signs that a banking crisis is in its early stages. I'll be watching to see how Bitcoin closes. Does it turn off this trend line again, including the shadows here, including the peak here, and we're hitting it. Backtesting this trend line. How do we close? Again, we're in the holiday trading now. I told you that if we sold off ahead of the Christmas week, we could be getting a rebound with it. More likely over the holidays, we'll see the push down now because we've gone sideways, forming the rising wedge, breaking down and back testing. Still think you get these two more legs down. And posted this chart at the top again, near the top here, and again, it's played out very nicely. We've dropped 36%. I don't think it's over. I've talked about dropping 50%, that's 63,000, 74,000, the April low, giving it all back. I think you have this massive head and shoulders. We have that smaller one I talked about that's played out here, but I think that you've got this larger one, and I think you get this dump down towards 63,000, towards the 200-week moving average, and then I think the Fed ends up panicking, but the stock market has to play catch up, and then I think you get this rebound back up for the right shoulder. So I think that'll be at some point in January. Maybe it drags out into February or into the first quarter, but again, it's playing out so far. Again, I don't know the future. I'm just looking at what Bitcoin has done in the past, what it's likely to do in the future, completing the 4-year cycle, and then kicking off the bear market. It usually drops around 50+%, give or take, just a little bit less, a little bit more, but on average around 50%, just over 50%. The smallest drop to kick off the bear market so far has been 45%. If we go down to 74,000, it's 41%. Again, posted this. I was laughed at, mocked, and yet it's been right. Again, as I've said, down here, I'll be looking for an opportunity to close short positions down here somewhere. With my swing trades, I'll be looking to flip and go long, and I'll be looking to ride this back up towards the 90,000 to 100,000 area. I'll be looking to flip the trade again and go short up there and lock-in gains on longs. Again, I'm looking to trade it back and forth. Just as I got bullish, very extremely bullish, very bullish down over here when everybody was panicking, thrown in the towel and giving up hope, I'll get very bullish down here. And I'll get very bearish up here just as I got very bearish up here as we slammed into major resistance. Trying to play these swing moves back and forth. I'm not interested in being a perma bull. I'm not interested in being a perma bear. I'm interested in making money and trading the swing move. Now, the bears love me right now because I've been bearish. When I turn bullish down here, they're gonna hate me just like they did back over here. I said this was corrective and Bitcoin was going to new highs. Over here, I'm going to say what I've been saying, and that we're going to get a bear market rally, and we're not going to move to new highs. We're going to get a lower high. Likely set up this lopsided head and shoulders pattern. Some of the bulls might like me again. They're not going to like the message that we're in a bear market rally. Here's the Elliot wave count. Again, this is the count that I think is most likely in play. Again, I think you'll turn down, take out 74,000, come down in here towards 63,000, just above it, just below it, right at it, whatever. 50% drop. That's what Bitcoin's done in the past to kick off each bear market. Approximately dropping 50% or so, just under it or just over it. I think you get a relief rally in the form of a bear market rally. If I bring it up close, you can see what I'm looking at. And again, if we include the shadows over here, from the peak here at 126 and the shadows at 116,000, you're slamming into the trend line right here, right now. If we excluded them slightly, then we hit it over here. But if you include them, you're slamming into it right now, back testing the trend line right here of the breakdown of the little rising wedge. Bring it up a little closer. Here's what I think is going on. I think you peaked. I think you have primary wave 1. I think you have primary wave 2 for the final exit point at 116,000. I think you have wave 1 down, which is intermediate wave 1. I think this whole thing is a primary wave 3, extended wave 3, crash wave 3, intermediate wave 1, intermediate wave 2, intermediate wave 3. I think you have intermediate wave 4, and I think you're now in intermediate wave 5, and I think that will take you beyond 74,000. I think you'll get this push down, you'll form a divergence, you'll bounce, and then I think you'll end up getting one more dump down into January, possibly into early February or something. Then I think you get the massive relief rally back up to the 200, which is currently dropping. That's a black line right here. And again, I've drawn some different paths. It may drop and turn back up. We may drop and then see it turn back up with the rally attempt back up. Saw something similar to that back with the last bear market where it started to tip lower and then ended up going higher. Here it is. We dropped 52% after the 2021 top. Oh, that's outrageous. That doesn't happen. That's how we kicked off the last bear market. We ended up rallying back up 46%, but the 200 period eventually it started to go lower. And then it tipped back up and tipped down, turned back up and went higher. It turned down again. So again, it just kind of went down, kind of sideways, back up, back down. And again, eventually you're moving back towards that 200 period. And then you'll see a reversal at it. That will be the big relief rally, the big bear market rally that will absolutely convince the moon boys, absolutely convince the experts. The sell-off is over. Now we're going to new highs. You remember these people? They're the people that told us that we were going to be at 200 and 250,000 by the end of December. And here we have a few more days till the end of December. And here we are, here we are at 89,000 at the moment. We had reached 90,000 earlier in the session and right now pulling back off of that level. And we're at 89,000. We're not at 200,000. We're not at 250,000. Experts, the moon boys, they all got it wrong. The indicators got it right. The mathematically based indicators got it right. Now they're telling us we have another bottom at 80,000. I'm telling you that's not the bottom. We'll get a local bottom down here somewhere closer to 63,000 to 74,000. My guess is we'll probably be to the lower end of that target towards 63,000, maybe even more. If we get a 52% drop like the last time, you're looking at 60,000 towards that 200-week moving average I've talked about. They'll drop and they'll call another bottom. And again, we're probably not going to drop to a low until we see the Fed panic. And then I think you get a bottom. I think that's not until January. Maybe it drags out into early February. I think that you're going to need to see the stock market play catch up first. I think you get this massive relief rally. Institutions will sell into it. Some people that got afraid here with this drop, that will be afraid, will eventually sell into it. Not many, but some. Most of the people will ride this thing, the bear market, all the way down. What the moon boys do, that's what the herd does. A lot of people that are hodlers, not by choice. And a lot of people end up buying at the wrong time, the top or near the highs. Buy maybe a position at the right time, but don't sell into the rallies and end up being a hodler. You got a bunch of people that are trapped up here that bought the dip. Oh, how's that buy the dip working out? The dip that keeps on dipping. They keep buying the dip that keeps on dipping. But you got a lot of people that are trapped up here. When we go lower, you're going to have people really getting upset. And finally, we'll see capitulation. We'll see a tradable bottom. But this 80,000 is not it. Still clearly in a downtrend. There is no bullish divergence. Weekly signals have confirmed a bear market. So again, waiting for Bitcoin to go make new highs. It's not going to happen. And when we do rally, you're going to get a powerful bear market rally. Maybe above 100,000, depending on how low we go, but probably into the 90,000, 100,000 range. Whatever the 200 period may be at the time, going into March or April maybe. But the people that told us the sell-off was never going to happen, they're going to be absolutely convinced that now we're going, and you're going to get nothing more than a bear market rally to fool them yet again. They're easily duped because they believe the hype and the hopium. They daydream about their sports cars and their mansion and see themselves on their yacht rather than paying attention to what's going on with the charts. These people in La La Land, you got these so-called experts selling the snake oil, lulls the public into a false sense of security, telling us we're going to be at 200,000 by the end of December when the bottom falls out of Bitcoin, tanks down to 89,000, 200 and 250,000. Bah humbug. Now, maybe the next cycle, but not this one. Bitcoin's already completed the 4-year cycle. It's already topped, already confirmed a bear market in the daily, weekly, and monthly time frame. But people want to go, no, this time it's different. These hoaxes, oh, the 4-year cycle, it's dead. No, your predictions about 200 and 250,000, that's what's dead. 4-year cycle played out like clockwork yet again. No, we have the super cycles. So you'd rather believe in something that's never happened and discard something that has happened. Another Moonboy hoax. The Fed is giving us QE right now. They're not. They're intervening to try to prevent a banking crisis. It's not QE. But hoax after hoax after hoax with the Moonboys. And yet people keep believing this stuff. It's incredible. Nevertheless, I digress. Let me just say this. The alternative to this would be that we have a 1, a 2, a primary 1, 2, and this is 3. Then you get 4, and then we get 5 right here. I think that is less likely, but that is my alternative count. I think it's more likely that we see Bitcoin get a leg down, a rebound back up for primary wave 4, and then get one more push down into January. Maybe it drags out into February, but again, I think you're not going to bottom out until you hit the 200 or move closer to the 200-week moving average. Now here's the 4-hour chart up close, and again we've rallied back up above the 200. The 50 is still below the 200 period. They're both, the 200 and the 50 are still sloping lower. We got above it here. We hit the trend line with our linear scaling. This is log scaling. The trend line is a little different here, but again, we're likely getting this counter trend and probably going to see it fail and come back down and eventually come down here, take out this low. We bounced off the support zone, and you're probably going to take out this low here at 80,000 and our support zone here, the low over here and the low over here. And I think you'll see that happen, and I think that will give you a test of 74,000. I think that will complete the hash wave 3, and I think it will likely bottom around the low 70,000 area in all likelihood. Zoom out, you can see right here in the 4-hour time frame what I'm looking at. Again, I've talked about the count on the daily chart, primary wave 1, 2, and I think you've got these intermediate waves going on, and I think you've got intermediate wave 1, 2, 3. I think this is 4. I think we've now started intermediate wave 5. And if I scroll down here a little bit, you can see intermediate wave 5 down here, and I think that completes primary wave 3. I told you if we saw this complete quicker, this counter trend rally for intermediate wave 4 took out 74,000 ahead of Christmas, you might see a rebound the holidays. We didn't do that, so again, you're likely going to see during the holidays a drop down below 80,000. Everybody's distracted with the holidays. This is not a bullish chart. This is a series of lower highs and lower lows and a downtrend. It's not over yet. Spring parameter is still in negative territory. You're likely not going to get any kind of bigger rebound until we get a divergence here with spring parameter and a divergence with the RSI in the daily time frame, a divergence with the awesome oscillator. We do not have a divergence present. This 80,000 low, and you need to drop below it if you're going to form divergences like here in the 4-hour time frame or on the daily chart. Again, if we include the shadow right here from the high here and the high here, we include the shadow, you're slamming right into that trend line. RSI is still pegged in the negative region. It's pulling up to the 50 level. Again, the pull-ups to the 50 is where the sell-offs have been. The last time we pulled up to the 50, you were at 94,000 and you turned it down here back to the support zone. Again, likely in backtest mode of the rising wedge and of the downward trend line, and this will likely result in more selling pressure at these resistance levels. MACD still pegged in the negative region. If it rolls back over again, you're going to take out the support zone. You're going to get a dump down to this 74,000 area over here. Probably take it out and bottom in the low 70,000, 70, 71, 72,000, something like that, 73,000. Probably bottom out and get another attempted rally, followed by more selling. And I do think that a tradable bottom is coming in the future, in the near future, probably in January, maybe dragging out into February. I think it'll be a massive bear market rally. We're not going to new highs, and the sell-off will not be over. It'll just be a short-term bottom. Stochastic turned up with this rally as we're backtesting, but it's still in the negative region. And I told you there would be bounces along the way, but again, the 80,000 low is not the bottom. Bounced to 94,000, sold off. Now we're bouncing again. Here we're at the upper end of the cloud. Still into the negative region. We're likely going to form a divergence. Momentum here, still bearish. Tried to rally. It's fizzling out right now. We were up over 1%. Now we're up about 7.71%, just under 0.75%. Again, you're likely going to form a divergence on the awesome oscillator. It's still in the negative region. Got a couple of green bars with this rally back up, but bars are still red here. Green bars on the awesome oscillator. Price bar still red. The cloud's still red. Signal still bearish, and you're turning off of the trend line from the high right on the nose. After dropping from 94,000, a short-term bullish here signal here giving us this rally back up to the trend line. Again, the one back over here, counter trend. The one back over here, counter trend. And 80,000 is not the bottom. You look in the weekly time frame. Again, we saw signals bottom out. Daily time frame, that gave us a relief rally. Here in the weekly time frame, signals turned back, got a minor bullish signal here. Now we're trying this week to get a minor bearish signal, which is a continuation of this. The bars are still bearish here in the weekly time frame. Again, you're likely headed back towards the 200-week moving average. Currently here at the 57,000 area, and we do what we did in the past, drop down to get a 50% drop or just a little bit more, you're dropping to 60 or 63,000. You're moving back towards that 200-week moving average. As we've been bouncing up the 50-week, here you're going to come back towards the 200-week, maybe tag it, maybe just above it, but you're going to bounce off of it, and then you'll get your counter trend rally back up to the 50-week moving average here. So you'll get this dump into January, or maybe it drags out into February, and then you get this rally back up to the 50-week moving average, to the 200-day moving average in the daily time frame. They're almost equivalent. The 200-day usually hovers between the 40-week and the 50-week moving average, right in between those levels. They're very close to one another, the 50-week moving average and the 200-day moving average. Last bear market rally, we rallied up to, in 2022, we rallied up and tagged the 200 right on the nose, and we overthrew the 50-week, and that was the completion of the bear market rally. Likely going to see the same thing here. We got a beautiful topping signal back up at the top. I talked about that at the time, and signals reverted back to bearish. Been bearish with bars flipping back to bearish ever since. Stalling at the orange line here, over here just under the purple line. Resistance levels. The green circles have given us counter trend rallies, but that's it. As really the orange line has been acting, the orange and purple line have been acting as resistance here all the way down. Some signals turned bullish, reverted back to bearish. Some signals remain bearish. Some signals turned bullish, turned back to bearish, and are still hanging in there here. That's because we're going sideways. Other signals remain bearish here. We're testing the line again. It's been acting as resistance, and again, since the liquidation, bars turned red. They've been red ever since. Here, never bought into the counter trend rallies at all, and again, we've likely not bottomed. 80,000 is not the bottom. Now here we had a short-term bottoming signal, much like over here. Again, these have been counter trend rallies, counter trend rally, counter trend rally. Again, here we're going sideways, showing the trend is range bound at the moment, but you have the tightening of the Bollinger Bands here, again telling us and warning us something big is getting ready to happen. Last time we had the tightening of the Bollinger Bands, you had this sharp drop. This is warning something is setting up. A big move is coming, likely another big leg down. Bars remain red. Cloud remains red. Again, flip back to bullish, much like what we had over here with the final exit point. Flipped back to bearish, reverted back to bearish after that. Tried to turn above the cloud today, turning down off of it, getting a little topping tail, not successful. We'll see how we close. Beautiful topping signal here, back up at the top, at a counter trend rally here, surrounding Bitcoin's average price, but then lost it. There is no bottoming signal. Okay, we had a bottoming signal at the bottom over here. We had a topping signal over here. We had a topping signal here. There is no bottoming signal. More than likely, we will get one. Holding below the 50 period, the green line, and again, likely going to come down, take out 80,000 and test 74,000, and probably move slightly below it, 70, 71, 72,000 or something like that.